So let's get some global perspective and find out how investors are positioned on India. Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments, is now joining us on the show. Prashant, thank you very much for joining in. This is Reema here. You know, the last time we spoke to you, you were encouraged by the incremental good news coming out of China. Plus, there was a valuation difference between India and China. We discussed at length about India versus China. Where do things stand currently as we enter the second half of the year? How do you feel about India, and how might the Indian equity markets perform?
I think the Indian equity markets should continue to do well. I think the picture moves to just the earnings cycle now, and we'll wait to hear from commentary from the banks, the cement companies, and some of the sectors that have lagged this year, which is healthcare and IT companies as well. So I think the picture will get better as we move across the earnings cycle. But what's really good is at least the monetary cycle easing, inflation being under control. And now if we get some trade deal happening with the US and India, that will provide more impetus to the market going into the summer.
Prashant, hi, morning. So, given that equity markets are at elevated levels, almost at all-time highs in the US and India, how would you look at India amidst this context? Because the market, while it's done very well throughout April and most of May, now is the tricky part. Can the market rally on well beyond the previous all-time highs? What's your sense?
I think it will continue to chug along, and as earnings visibility will become clearer, even though some companies might disappoint in this quarter, the key will be the commentary they'll give going into next quarter as well. I think both US and India market continues to chug along, barring any tariff mishaps or, if there's no trade deal, which implies a 26% reciprocal rate on India. But if you think from a long-term perspective, both India and US have a lot to give and take. So US can supply India with energy, defense, and India itself with electronic products and auto components as well. So I think it makes sense for these two large economies to kind of work in tandem rather than have tariffs against each other.
Hi, Prashant. Good to see you in. So if you're allocating fresh money, then what would the allocation strategy be? First, between emerging markets and developed markets. And from the emerging market basket, how much does India get?
Sure. So I think if you look at what's happened from a US perspective, clearly the US has come back and still captures 60-70% of total global flows. But besides the AI story or the Mag 7 story, I think earnings on the US, banks and others will be subdued going into later half of the year. So apart from the AI capex story, it's very hard to get excited about US markets. I think Europe will continue to do well. Within emerging markets, I think Korea and India continue to do well. China, I think a lot will depend on how real estate plays out in the second half of the year. If there is, I think the Chinese government has been resisting on doing big stimulus there and has been more restrained. So that will have an impact on overall Chinese story. But overall, I think we are very positive on emerging markets. Outside of US, I think both India, Korea will continue to do well.
All right, interesting. What about President Trump? Do you think we have seen peak Trump, or do you think that's yet to come? First 6 months of the year have been a roller coaster ride, even the last 24 hours. I mean, he goes after Powell, talks about tariffs. Do you think we've seen the peak? Because the last time around, he went too aggressive. He had to actually pull back a little bit and cool his heels. Your take?
I think, the market has become more attuned to the Trump administration functioning style. And one thing about this administration is that if they do kind of press hard, they do also pivot back as well. So they're not, as fixed to their viewpoints, and the market has attuned to that as well. So I think longer term, you have to be, with regards to Powell and Trump, you have to be sympathetic to both point of views. I think Powell himself said today that if it wasn't for the tariffs, he would have reduced rates, which I guess Trump is and the administration is pushing him to do. But I think longer term, the Chairman Powell is looking to see how these tariffs will impact inflation. And if, for example, the CPI continues to be range bound where it is now, we will see a rate cut cycle in the second half of the year.
How many rate cuts? And is it already in the price, or can it act as a positive trigger?
Well, I think the market is penciling in at least two rate cuts, but it might, I think the Chairman Powell might be more restrained, but he's also data dependent. So if we don't see a big inflation spike in sort of the next few months, I think we will get rate cuts from the Fed.
All right, Prashant, very quickly before we let you go, Powell's term ends in May 2026, and we'll be looking forward to the replacement. If the replacement is announced sooner than expected, do you think that will send a negative, another negative blow to the dollar index? Because a couple of experts overnight, I was hearing them, they were indicating that in case that replacement is actually announced ahead of time, we could see a further downtick on the dollar index. Your take?
Yeah, I mean, there might be a near-term impact, but I think longer term, you realize, the position of the chair of Fed, and we've seen RBI changes as well. Once you kind of take that chair and you have a dual mandate with this inflation and unemployment, you kind of focus on that pretty seriously and kind of try to make data-dependent decisions. So initially, maybe the market will be perturbed, but I think, again, it depends on who comes in and, how they kind of react with the market at that point of time.
Prashant, so just to recap, your order of choice between markets would be US first, then India. I mean, just recap the preference order for us.
Yeah. I think US, Korea, and India. I think Korea, what's happened is we have a new government that's kind of focused on improving corporate governance reforms there. Valuations are a lot lower, and they might even think about doing some sort of fiscal stimulus spend. But India as well, I think, is one of our kind of top three markets when you look from allocation standpoint.
Okay, all right, got that. Thank you very much, Prashant. Good perspective. Nice speaking with you this morning. Thank you for joining in.